everyone, good evening to all of you. So for this evening, my group and I will explain to you two topics and one past year question about these two topics. So I will cover the topic of objective and the main purpose of financial reporting. So for the first slide, let's see what is the objective of the financial reporting. So the main purpose for financial reporting is to provide financial information about the reporting entity resource users. Okay guys, as you know, the financial reporting have their own users. We have learned it before. So the example of users of financial reporting, which are investors, lenders, other creditors, and customers. And also, it is a lot of users, but I only mentioned the main one. So, for the first one, the investors. Okay, investors use the financial reporting in order to review or to check either if they invest to the firm or the company, is it worth. So I put the terms of words at my slide. So the key point is worth. The investors want to know, is it worth if they invest towards the company. Okay, next, the lenders. Lenders we know as we can assume bank. Bank will look at the firm's financial reporting in order they want to have the assurance. Assurance in Malay we call jaminan. In order they want to ensure that the firm or the company have the ability to repay back the money lent to the by the bank. Okay. So for the third user is other creditors. We can be familiar with the name of supplier, right? Okay. So the supplier, if we put less, if we put ourselves in supplier's position, so we want to know, is it they have the credibility or ability to repay back what what they buy from us. So they may owe our they may owe money from us because they buy our products or services in account, which means they owe us. So in order to let them being our customer by not paying first the money, so is it we can trust them. So they need a financial reporting to check all that. And the last one, customers. Okay, we find it hard to see customers see um, the big company like Apple. Let's say we find it their financial reporting to see their financial statement. It is likely hard for seeking that kind of customers. But for the customers that is we call it like susah nak percaya dalam beli barang yang mahal, they would see that kind of financial statement. Okay, so next. So the other purpose of financial reporting is to check the efficiency and effectivity of the company manage their economic resources. Okay, economic resources is for those who do not know what is economic resources. Economic resources is divided by four: land, capital, labor, and also entrepreneurship. Okay, so this user may not receive reporting entities to provide information. Let's say the background of the company. So in order to get the company's background, we need to check their financial reporting. Okay, and also the shareholders of the company. Let's say the DRB-HICOM group. If you want to know their shareholders, we will see their financial reporting. Okay, So, okay, next slide. I have shared to you more about their benefits, but right now I will also touch about their limitation. Okay, what do they can help? The things that they can help us to find information in the financial reporting. Okay, so financial reporting they can provide us the information that for the users in kind of general economic condition. Okay, let's say the company have their has suffered loss, but the company can say the loss is because of the pandemic COVID-19. Let's say, so it can the financial reporting have their own limitation to share about the reason why it happened. They are only share about the value. Okay, next is the political event or political climate. Okay, I give example of change of government. Change of government also affect the company itself because um, we can call it a subsidy is cancelled or grant will is not being given. So there might be slightly effect at the financial reporting. And the last one is the industry and company outlooks. So um, the whole of the company might can be see from the financial reporting itself. We need to go in the by physical side, let's say, to know how the company um, operating by our own view. Okay. And the last one, I want to say that the financial reporting is not designed to show the exact value of a reporting entity, but only the estimation to the users that already authorized by the auditors. Okay. Next slide. Okay. Then I will continue about the subtopic of this topic, which is the financial reporting also give information about a reporting entity's economic resources and claims. Okay, so which is next slides. Okay, so you guys might be confused what is the economic resources and claim. So this is the definition of economic resources. Economic resources for easy saying that economic resources is what company own or control. Example like non-current asset or current asset like cash, building, land. So that's what that we control. Okay. How about claims? Claim is the portion owned by the creditors or shareholder from company's asset. Okay, let's say for equity, if the investor invest to our company, there might be equity, right? So the equity is we control the equity, but there's still a portion that we need to give back as the repayment. So that's why they um, labeled as claims. Okay, next slide. Okay, so what is the usefulness of resources and claims information? Okay, that information can help users to assess the reporting entity's liquidity and solvency. Okay, so it helps. Okay, in accounting, they might be familiar with the ratio, liquidity ratio and solvency ratio. So the users may use financial reporting to calculate calculate it. Okay, next, information in the financial reporting can also help users to assess management stewardship of the entity's economic resources. So the information might be the how they are handling its liability, its debts, their um, debtors, their customers, trade receivables. So financial reporting will summarize all of that information. Okay. Okay. Next slide. Okay. So this is a figure I want to share with you. for more understanding. Okay, so you might be confused. What is the economic resources and claim? So by helping explain by a picture, so you might be easier to understand. So for the first one, investors invest to our company. So our cash or our asset will increase. Okay, if they are investing in cash, the cash is increasing. If they invest in machine, let's say, the non-current asset will increase. So the increasing is the economic resources. Okay, the cash. About claims, after the investors has put their money in our company in 5 years. Okay, so at the end of the 5 years, sorry, at the end of every year in the 5 years, they might have agreement to pay for a company to pay dividends 5%, let's say. Okay, that's we call as the claims. So all of this all of this will be reported in the financial reporting. Okay, okay, next slide. So financial performance related by accrual accounting. Okay, why users can rely on financial reporting? So this is one of the reason. Okay, so we know that accounting, uh, especially in private company, they use accrual accounting. So accrual accounting, they figure the effects of transaction and other events on a reporting entity's economic resources and claim, even if the resulting cash receipt and payment occur in a different period. Okay, for okay, so this is the example I want to share with you if you are not understand. Okay, so let's say the company make a sales. So make a sales on account, which mean the customer do not give directly the money. Okay, so they want to they will be our trade receivable. So sale is recognized at the point of sale, but not at the point of cash receipt. If the customer do not give the money, but if the sale is occurred, but in the financial statement still recognize the sales at the date of the sale is happened. Okay, so for the second one is purchase. Same goes like same like the sales transaction. The purchase also will be recognized at the point of purchase, but not at the point of cash payment. Okay, so this accounting will actually help to make a more reliable financial statement because they provide a better basis for assessing the entity past and future performance than information that only about solely about cash receipts and payments during that period. Okay, next slide. Okay, financial performance this is a continuous slide. Okay, information about a reporting entity's cash flow during a period also help users to assess entity's ability to generate future net cash flows. Actually, the title of this slide is actually wrong. This is financial performance reflected by uh, past cash flows actually, not accrual accounting. Okay, so this will help to assess management stewardship of the entity's economic resources. Okay, the information indicates how the reporting entity obtains and spends cash. Okay, so I will continue on the point number 4. Okay, in the financial statement also include information about borrowing, repayment of debt, cash dividend, and also cash distribution to the investor. So this will help the existing users like investor, like customers, bank will use this information in order to determine the effect of the company's liquidity and solvency. Okay, next slide. Okay, so this is the usefulness of fast cash flow information. They help users to understand a reporting entity's operation with working capital operation management. Sorry. So next is evaluate its financing and investing activities. So we might familiar or usually see financing and investing activities at the statement of cash flow. Okay. Okay. So for the third point, they will also interpret other information about financial performance. Okay. And last but not least, assess its liquidity and solvency. Okay, next. Okay, and it might be my last slide. Okay, so this will the financial reporting also help users to assess management stewardship of those resources. Okay, stewardship means how the company control or taking care of their resources. Let's like their money, their customers. So we will know in the company will show it their trade receivable value in the financial statement and so on. Okay, next. That such information is useful for predicting how efficient and effective management in the companies. Okay, and it can be useful for assessing the entity's prospect for future net cash inflows. Okay, example like trade receivables, cash, and royalty receipt. Okay. Okay. So thank you